They say that building up the first 100k dividend portfolio is the hardest. But what about the first 10k dividend portfolio? You have to start from zero, perhaps short on cash, and you might have little to no knowledge about dividend stocks or the stock market in general, and perhaps not even investing knowledge. Yet, you still want to generate that passive income with dividends. In this video, I will show you how I started from scratch with no prior investing knowledge and very little cash to spend. I now have a dividend portfolio well over $10,000 and I will show you how you can get there much faster than I did. At the end of the video, I will show you my portfolio, but also a model portfolio you can use for yourself that puts all the learnings from this video together. When you start investing in dividend stocks, or stocks in general, it can be very overwhelming. You don't know the terminology, what is a dividend, what is dividend yield, what is payout ratio, and so on. You also need money to invest, so where do you get that? But once you are past that, you get to the next phase. Where do I find dividend stocks and what are good dividend stocks? Don't worry, I will get to all of that in a bit. When I started with dividend investing now almost 4 years ago, I had very little to no investment knowledge and certainly did not have any experience in the stock market. I also did not have any large sum of money to start with that I could invest. Show me the money! I came on the path of dividend investing when I was listening to a podcast and was intrigued from the start. You can earn passive income from dividend stocks, your portfolio value is likely to rise because of the increasing share prices of your stocks, and you don't have to watch the stock market every day. Whoa. So what I did is I started to read a lot of books and ended up with this stack. At that time, there were not many YouTube channels around yet for this topic. Luckily, now there are a lot of YouTube channels around, like you're watching now, so you don't have to dig into those books if you don't want to. That's what I'm here for. I started an account with a Dutch broker and started to dig into dividend companies with the knowledge I gained from those books. But I quickly ran into another problem. How do I find and screen for the dividend stocks I'm looking for that meet my criteria? Let me share with you what I learned from those books and how I figured out to screen for the dividend stocks that I wanted. First, the terminology. It is important that you understand at least the basic terms, because otherwise, how can you decide what dividend stocks are good and which ones are bad? When you buy a dividend stock, you receive passive income in the form of dividends. A dividend is a way for companies to share their profits with you as an investor. So essentially, you get paid a piece of their profit. Companies typically do this when they are making so much profits that they can't reinvest enough of it in their own business to reuse it efficiently. So usually dividend-paying stocks are larger, well-established companies, also referred to as blue-chip stocks. Dividends are usually paid out every quarter. There are 4 dates involved with dividends. If you want to know when to buy a stock to receive the dividend, look out for the ex-dividend date. You have to buy the stock at least 1 business day before the ex-dividend date. That brings us to the next term, the payout ratio. This is how much of their profits a company pays out in dividends. This can easily be calculated by taking the total amount of dividends paid out per year by the earnings per share. The earnings per share are basically the profits of a company divided into little pieces to reflect the number of shares a company has given out. There is much more, but let's stick with these in this video. If you want to learn more, make sure to check out some of my other videos as well. Now that we got the basic terminology out of the way, you face the next problem. Where do I begin? As a beginning dividend investor, this was quite a struggle for me. I got all that knowledge from books, but what is important for me as a dividend investor? This also depends on your personal preferences and your goals. All I can do is tell you what I look for so you can distill your own requirements. So as a dividend investor, I'm looking for dividend stocks with good dividend track records. I want companies that have paid and increased their dividends for at least 5 years in a row. This already weeds out a lot of companies. In the next bit, I will explain how you can easily find those companies. You are investing in an actual company, so I also want a company that I understand and that has a sustainable competitive advantage or moat. This means that a company possesses a quality that is very hard to replicate for another company. Examples of this are Apple with their brand recognition and quality, or Microsoft with their integrated office suite, but also companies like Coca-Cola with their brand recognition and distribution network, and so on. In that light, the business model of a company is also important. How do they make their money? I'm also looking for companies that pay a safe dividend. This is where the payout ratio comes in. Depending on the company and industry, I prefer a company that pays out less than 70% of its profits. So a company like Coca-Cola is already a bit too high for me. That's why I bought Pepsi. I also look for companies that are growing, so increasing sales and profits, but also well-managed debt. On top of that, I also prefer companies with what I call a perfect dividend combination of dividend yield, the return you get by dividing the dividends by the current share price, and dividend growth. I prefer companies with at least a 3% yield and at least 5 to 6% dividend growth. Once we know what to look for, we face yet another problem. Oh boy, does this ever end? Because how and where do you look for these stocks? I remember clearly, I was fiddling around with different stock screeners, but none of them could really do what I wanted. Then I found the perfect solution for this problem. A list that already has all dividend stocks that have increased their dividends for at least 5 years. It allowed me to do a quick initial screen to weed out stocks that did not increase their revenue, were not on sale, or the yield was too low for me. This list is called the Champions, Contenders and Challengers list. I use a version of Dividend Radar which contains about the same companies but is updated weekly. I'll put a link down below in the description. So you got your list of dividend stocks you want to buy. Shall we just buy dividend stocks at random? No. Before I dive into how the heck you diversify your dividend portfolio, first a bit about me and this channel. I'm Tom from the Dividend Attitude Show. On this channel I make in-depth videos about dividend stocks, battles between two dividend stocks and portfolio updates on my personal portfolio, but also general knowledge videos like this one. So how do you diversify your dividend portfolio and why is it even needed? You probably understand that you should buy more than 1, 2 or even 5 stocks. Don't put your eggs in one basket and all that. But true diversification is not only about the number of stocks. It is also about the correlation between stocks. Right now I would say my portfolio is quite diversified, but it wasn't always like that. I built up my portfolio with one company at a time and further expanded into different sectors each time I purchased a new stock. Correlation between stocks means that if one stock in your portfolio goes down, another one goes up, limiting the risk that your portfolio goes down altogether if an event hits certain industries and sectors particularly hard. To overcome this, the key is to invest in different sectors and different industries within those sectors, but also to invest in different sizes of companies. And you can measure this by the market cap. More on that later. I'll show you my personal portfolio in a bit, but let me give you some examples from my own portfolio. In the current pandemic, the retail sector was hit particularly hard because stores were closed. I own a stock that invests in commercial real estate and owns a lot of outlets. This is Tensure Factory Outlets. This company operates in the REIT sector. The stock price of this company went down 60% during the first months of the pandemic and had to cut its dividend because the renters could not pay their landlord, Tensure. Had I owned 10 dividend companies in the REIT sector that all invested in commercial real estate, this would have had a much greater effect on my overall portfolio performance than it had now, and I might have lost a lot of passive income. On the other hand, a company like Qualcomm or Williams-Sonoma went up like crazy during this time. One is in the IT sector and other in the consumer discretionary sector. That is why diversification is important, to safely build up your passive income stream and your portfolio. I'm curious how many stocks you own already, and in how many different sectors. Let me know in the comments below. Before I show you my portfolio and the model portfolio you could use for inspiration, we need to address an important question first. Money. What if we don't have any money to invest? Or at least you think you don't have any money to invest. When I started, I had some spare money, but not a lot. I certainly did not have over $10,000 lying around, or the almost $16,000 I have in my portfolio now. And you and I are definitely not the only one. According to a study done by JP Morgan Chase, 42% of the people that were not invested said it was because of insufficient funds. So what did I do? I started with monthly deposits in my portfolio, but then life got in the way. And I decided to stop contributing because I felt I was short. I can tell you that was a big mistake. And probably the biggest mistake I made on my investment journey so far. Had I just kept contributing, even a little bit, to keep the habit going, I'm sure I would have reached the 10k mark much faster than I did now. It took me over 3 years to get there. So after I realized this mistake, I started contributing about $110 each month and kept building this up every time I got a pay raise or I was able to save somewhere. And if there's anything you should take away from this video, it is that if you haven't started, you should start. But also to build a habit of automatically depositing money every time you get paid. This is called paying yourself first. It doesn't matter if you only contribute $10, $20 or $50 each time, just do it. and do it automatically. You build a habit and it will get you addicted to receiving dividends, making you want more, and you will find ways to start depositing more over time. There are not many addictions that are good for you, but this one definitely is. To give you an idea, this is what my portfolio looks like at the moment. I have 17 stocks in 9 different sectors. There are just 2 sectors I don't own any companies in yet: telecom and materials. You're witnessing a real scoop here, by the way. This is the first time that all my positions are in the green. My portfolio is producing $534 in dividends per year on an investment of a bit over $11,000. My yield on cost or investment is close to 5%. Be aware though that this portfolio is built around my personal preferences and goals. So how can you build a portfolio that is diversified and gives you sufficient dividend income? Let me show you a model portfolio you could use for inspiration. Of course, this is not investing advice in any way, for informational purposes only. This portfolio has a total of 20 stocks. This is not a random number. According to modern portfolio theory, you come very close to optimal diversity with 20 stocks. The portfolio has companies in each sector. I weighted it equally by stock, but not by sector. This also has to do with how much risk a certain sector has. I also measure the beta of a stock and the overall portfolio beta. The beta tells me how volatile a certain stock is compared to the overall market. 1 is the same volatility as the overall market, above 1 is more volatile and below 1 is less volatile. This model portfolio spits out about $255 per year in dividends, with an investment of $10,000. This does not seem like a lot, but the average dividend growth rate of the last 3 years of this dividend portfolio is 10%. Meaning your dividend income would grow with 10% every year, without having to do anything for it. If you want more immediate passive income versus the delayed dividend income in this portfolio, be sure to check out episode 56 with 5 high income dividend stocks, which you can click on here on the right side. I'm off. Until next time, bye bye.